Red 5. Now, let's hope, as I said in the start, let's hope this is a turnaround. They've got record gold production, been hindered with production and raising issues. They've got a bit of tarnished name on the ASX. Let's hope this is the turnaround. Lads, unpack it for me. What has been happening in the Red 5 quarters?
Matty, this is look, it's a positive announcement from Red 5. They've come out, and in March, they've produced 17,500 ounces of gold. With a head grade of 1.49 grams per tonne, and simultaneous with that, they've sort of announced that they've repaid $15 million of their outstanding debt facility. So, I just want to give a bit of context to the listeners here on what sort of transpired at this company in the course of sort of trying to A, build this mine, and then and B, ramp up operations. So in March 2021, Red 5 put out to the market saying that they were fully funded, and they did that with a $60 million equity raise plus a $160 million project finance facility. Now, fully funded is a pretty strong word, and there are certain types of investors that will come along for the final raise because they want to benefit from the re-rate that happens when a company goes from developer to producer. So you want to be the last money in and capture that re-rate. However, the risk is that it's actually not the last money in, and that these developers actually have to go back to the market because they have troubles for whatever reason. And since they called themselves fully funded to the market, Red 5 raised $60 million in October last year, and then another $90 million in February this year. Plus, they got an extra $30 million in the door when they divested Siana, and they drew down another $15 million cost overrun working capital facility as well on top of that. So all this time, they were supposed to be getting free cash flow through the door from Darlow as well. And in today's announcement, there was that pay down of the debt facility, and make no mistake, that was funded by the equity that was raised recently in February. So, we all know that paying down your debt with new equity is not an efficient use of capital, but this company had no choice. It's been a rough ride for shareholders, and especially those ones that thought that they were the last money in the door on a bunch of different occasions. And this announcement, I hope, really does mark an operating turning point for the company, and let's hope there can be some light at the end of the tunnel. My eyes are going to be on their cash balance when the quarterly comes out. I'm pretty keen to see what their 31 March cash balance is to get a real indicator of how things are going there.
Yeah, I think that's right, Trevi. And we've seen a number of analysts as well come out with some pretty hard-hitting reports downgrading their price targets. Just to really summarise what you've said, not being 100% certain what the costs are going to be over the next year, and that's leading to those downgrades in price targets. I think it's also worth bearing in mind that the King of the Hills, previously called Tarmula Gold Mine, was what led to the eventual downfall of Sons of Gwalia about 20 odd years ago.
And fully funded doesn't really have merit these days. I think you look at the examples of companies that have been apparently fully funded that have raised recently. So Bellevue raised not long ago. They were fully funded. You look at Liontown, there's probably numerous other examples.
Look, I think we can have some sympathy for the fact that inflation is a real cause of cost escalation for some of these capital numbers that were fully funded in the past. But two enormous equity raises is pretty unforgivable when you use those words.
Well, let's hope, as you said, for shareholders and all the long-term shareholders and the workers at Red 5, let's hope that's a bit of a turnaround. So